All right. We can quit jamming out on some of those StreamYard beats. Not sponsored by StreamYard, by the way. Anyways, I am your host, Dan Rodman, co-founder at CoUnity. Welcome to another episode of Community with CoUnity. Again, another one that I'm amped up and excited for. This time because there's a component to this conversation where we're going to be jamming with Rand, and she is someone who is done a lot of research across DeFi, across tokenomics, across all sorts of things. And she was just telling me backstage she's very excited to talk about community. And when I hear that from someone who's very highly researched, it makes me really excited because I'm sure we're going to have some fun conversation. So without further ado, hop on up here, Rand. And if you wanted to give maybe a little introduction about yourself, and then we'll get right into it.
Hello, everyone. Thank you for bringing me here, and nice to meet you. So, my name is Rand. I am a co-founder at Quintes Protocol, um, as well as a lead researcher, cryptonomics architect, and been doing cryptonomic research for a few years in the industry, mainly in DeFi and like building incentive aligned systems. Um, One of our major work in like designs is Quintes Protocol, and the innovative like system that we created to create a self-sustaining financial product that allow people to earn ethical and sustainable yield while maintaining Sharia compliance and ethical standards. So yeah, that's brief about myself. Um,
Awesome.
yeah.
No, thank you for that. I think I'm really excited to maybe just briefly talk a little bit more about how did you kind of get into this stuff? How did you get what really made you interested to go deeper and deeper into research, deeper down the rabbit hole in a certain sense? What were some of the indicators that pulled you that way? What were you
Mhm.
doing before? And then how did you kind of transition into this?
Okay, so that's a very good question. And I get asked this question a lot of times, but there are many different things that really pulled me into it. One is the nature of like what the industry is like the building blocks of DeFi and the cryptonomics allow possibilities in finance that was almost impossible to exist in TradeFi. And we see those examples happening a lot in many different DeFi primitives. Um, so, for example, Uniswap came and allowed people to do transactions and trades without necessarily relying on order books, traditional order books, or buying and selling orders. The second thing also like MakerDAO came and enabled decentralized money, right? And many other DeFi primitives that truly came and like allowed um, possibilities and innovation that like would be impossible to be done in TradeFi. Why? Because the building blocks of TradeFi is not similar to crypto, and crypto is it has a lot of um, building blocks. Let's say it's a smart contracts. You can have mathematical like mechanisms in code. The second thing is actually transparency. I really love how users can actually see things before they use it. So this creates some form of trust. And the truth is that the code is much more trustable than humans. And like even authorities and governments can shut things down in under war or like under certain macro conditions. But if you're using something like um, censorship resistant that no one can stop it, you are much more secure. And the blockchain allow you to, as a user, to verify things and like see things transparently. And that thing is very, very comfortable for the end user. Um, Unfortunately, even though we are very much used to centralized systems and seeing things like, or things not being transparent much, yet transparency is very important. And then another thing is how much nascent is it is. Like, literally, it's just like starting out. We're still very much early, and I believe still the possibilities of what those cryptonomics tools and systems is very much early, and we still have many different problems that can be solved using them. And we already see this, and I really happy to see a lot of different builders and founders actually very much innovating, coming with high quality designs, robust systems, um, and solving problems with innovative solutions. And I think the quality of the things that are being built are exponentially improving over time in DeFi specifically. Why that's from risk measures to like actual value provided to end user, from that cycle to this cycle. So that's what really pulled me into it, is that, like the nature of it, but also other things related to like my own self and like some inner work that I've been doing. You know, so inner work that I've been doing that made me pulled into like investing, trading, and having so much obsession about cryptonomics early on. So yeah.
Yeah. I mean, like it sounds really interesting the way you passionately talk about this and how it's really fascinating. And I 100% agree. It's such an interesting space with all these different things. So were you working in like a trade fi before this, and that then made this also much more of a larger realization, or what was like your work before? I'm curious.
That's a very good question. So yeah, um, I have been like in like I've worked in stock market of like the main stock market of my country, Saudi Arabia, as well as like we've been doing pre-IPO investment. But it's not that like it's not like the real difference between TradeFi and DeFi that really intrigued me, but like it's difference between Web3 and Web2 in general.
Mm,
So when you're using things in Web2, um, it's very different. And even as a founder, when you're building just a fintech startup and like or a fintech platform, you're probably like having equity or stock. And as a founder, you'll be raising funds from investors. Then the next stage is like another round, and then either getting merger, like an acquisition, like in order to have your investor at least having ROI, like not on paper, and or at least getting IPO. But in crypto, it's not the same. Everything moves much faster than in Web2, and the speed of the way that you can actually go and list your own token that represent share of your technology. Second is how global it is. Like you have people from all over the world um, cheering for you and like building with you and using your platform is something in Web2 is not. Um, it doesn't happen typically. And the third and most beautiful thing is the ability to align incentives. So tokens, because they're liquid and because they're listed typically, can be used to create a self-sustaining system that align incentives between all protocol participants. Okay, and um, in a lot of my work, I've studied maybe about 300 white papers, and that was just out of passion and yeah, to architect better systems. So the common thing that we see about them is that a lot of those protocols achieve like growth through designing incentives properly. And to take the first and best example of this is Bitcoin, actually, right? Because Bitcoin is like a multi-trillion dollar market cap network that managed to have a lot of like city like a city size of like electricity through what? Through just like literally designing a system that's aligning incentives between people properly. And if you do the work well, you'll be incentivized. That's it. You don't have to manage everything as a developer or a founder in order for your system to grow. It's just like you build a system, a code, you make sure that it aligns incentives between all protocol participants. It's ethical, and it's economically sound. And then you see that network effect taking um, taking place into the like system, because that's what tokens enable. And traditionally in Web2, this is something almost hard or impossible to be done. Not not usual at all. But in crypto, this is the standard. I would say this is how it works. And yeah, for example, like Uniswap, you see a lot of people adding liquidity into different pools, not because they're hired to do that, not because they signed contracts to do that, just because they're getting fees of the trading volume, right?
Mm.
And just setting that incentive allow that kind of work to be done, right? And this way, like as an engineer, you can create systems that actually benefit a lot of different people. Let's say if you take an example of Uniswap, just like any DEX, right? You're benefiting people who are creating tokens because they
Hmm.
can liquidity. You're benefiting people who own the token because they can transact it, or like they can buy it, they can sell it. You're benefiting also liquidity providers because they can maintain, like they can hold the token at the same time getting some yield on top from the fees. Um, and it's just benefit for many different users depending on the role that they want to take. And I can mention like 100 other example, but we don't have all the
It
time.
i- it is super fascinating though around, and I could see how, you can hear your interest in this as well. And also you were, I think in your bio background, you did some work as like a teacher at Token Engineering Academy as well. And like tokenomics itself, like I did actually jot down a note on my phone when you did your intro, because I do think, like you mentioned, incentive aligned systems. I do think incentive design is something that's one of the most hardest things to do effectively in these different crypto projects, and from their tokenomics and then how they release them. And I think it's such a fascinating space and thing to talk about a little bit, because there's also a lot of, we get into a lot of deep conversations around incentive design for the community, around all sorts of different things, like more of the community gamified elements and incentive for the community to do different things, which often overlaps quite a bit with like the overall incentive design of the whole protocol or project, right? The community is directly connected to a lot of the overall infra components of, as you mentioned, the Bitcoin example and the Uniswap example. It's like this is decentralized community, literally, um, being like a part of the company and supporting the company, and in exchange getting their value, right? And so I think they're such closely like woven together. And yeah, I think like I'd be curious to know, what are some of like the top mistakes that you see when you like analyze all these white papers or some of these different projects, where now you start to look at and you're like, that's not a great like token structure from an incentive side of things. Like what jumps out to you from like I don't know, from a mistake side of things on the token side? I'm just curious.
That's a good question, actually. And I wouldn't say that there's something bad or something good. Um,
Mm,
but there's something like what I consider actually like bad is things that would cause any sort of harm. Harm on like two aspects. One is the project would not be sustainable for any reason. Second is that it would harm people like the user of the platform, right? That's financial harm, any sort of harm. Okay. Um, so the first thing is there's nothing bad because it's just like creativity. Most of the protocols are like structured to achieve a specific like objective, and then they do have different mechanisms to achieve that. I wouldn't say there is something bad or something right. It just like depends on what objective that they're trying to achieve. Also, I need to distinguish between tokenomics and cryptonomics. I'm not let's necessarily like so much passionate and experienced in tokenomics as much as cryptonomics. And yes, there is difference between them. In case you don't know, I'd be happy to explain it briefly.
Yeah, please.
Yeah. So tokenomics is like very simple. It's just like the native token of the platform, whatever utility it has. It's just the distribution of it. What does the allocation look like? 30% is for like this thing, 20% is for that, and then like 10% is for the other, etc.
Mint
The other
burn
thing,
rates, stuff like that.
and then
Yeah.
the cliff, right?
Mhm.
And then here, one of the biggest problems, actually, there are some problems here that we see. The mistake that some people do is that they give for the team a cliff and a lock very early on a listing date, or even for investors. And what this does is that it creates some form of selling pressure in the first days of the listing. And what this creates is community distrust and unsustainability for the project. And I just like don't like any project that does this, or like even founders with this kind of short-termism mindset, because this is not the role of the token. The token role is to actually represent the value of the real company that you're building long term, and then even derive value from that system that you're building. It's not to like
harvest.
It's not to harvest. At the same time, it's the goal for every project is to have it like as sustainable as possible, and they need to take this into consideration when they're designing their token vesting in cliff, to make sure that the cliff is very stable. You're not vesting a lot of tokens at one time unless you're pretty much sure there will be very big amount of buying pressure, whether it's yourself or other projects or like other investors. You have enough liquidity. So yeah, that's for one reason. Actually, we also have literally no cliff investing for our investors the first month. Even for example, launchpads, like we do have a lot of launchpads. You don't imagine, like maybe 10 different launchpads reach out to us, telling us, like, please like launch your token on us, like on our platform. Like we want to do a public sale. And then they do have some of them like requirements to have token like vested first day for investors, and we never allow that for two reasons. That the economic like impact of that would be not good. A lot of people would want to make returns from there and like sell the token. The second is it will actually attract the wrong people, like short-termism people who want to make money quickly, and that not the kind of people who want to invest in our token, but want people who have long-term vision and like believe in what we're building. The second so that's about tokenomics, right? Cryptonomics is different. Cryptoeconomics is the financial system as it is, like the token that we said, like it has utility where exactly, what does that system achieve, who are the players in that system, what role do they play, why they play that, what are they getting in return, what happens when a player A does X, what happens when player D does that. And you write all the different assumptions and different situations that can happen in that system, and play also even the best case scenarios, the worst case scenarios, macro and micro conditions, and you just like play that game again and again and again to make sure that the system is actually sustainable. But you start always with a goal. For example, a goal is to allow people to have liquidity for their asset, like meaning borrow against their asset. Okay, so who do we need, or what do we need? We need like a platform that has liquidity, money for people to borrow from. Or okay, so you start with that goal. Then what will bring that money? Mostly, like, will bring that more money. So you want to pay people for them to put their money there. So it means that you need some form of revenue for you to pay those people. So that revenue can come from the borrowers. But wait, what if you don't? If you cannot actually charge borrowers, for example, us, we cannot charge borrowers because we only build things that are Sharia compliant, and like borrowers is not Sharia compliant, it's like interest. So we will find
Hmm.
another way to generate that revenue and give it back to the um, people who are lending their money, right? So, and then more and more and more and more like different beautiful things. And like literally every different protocol is unique by itself. Beautiful designs.
Mm-hmm.
See, like Pendle has beautiful mechanism. Same thing, like um, Aave and like different like crypto teams continue innovating on top of their product and come up with mechanisms. And then the list goes on different, like, every single paper that I read just makes me more aware of, the possibilities. And the more that I read, the more that I realize the possibilities are boundless.
Yeah. I guess I'm kind of curious too. We can go maybe deeper on this later as well, but like looking in like the AI space in the last 2 months and just how crazy it's been with the developments and how fast it's going. I remember hearing about certain like
Yeah.
softwares that were doing a lot of simulations for crypto economics and things like this, and I
Yeah.
think maybe tokenomics as well. But now I wonder whether or not people will start to really like imagine just simulating a bunch of agents that are similar to your community and then testing them on like the crypto economics of your project. Like, let's put a bunch of agents in there and see like how they interact with it and put them out in the wild with like the test net or something and see kind of what happens. I'm curious if we'll start to see more agentic testing, I guess you could say,
Mm,
on some of these economic systems.
yeah.
Curious to know like any of more like the more recent white papers doing interesting things on that like AI front, or also what do you think about that as well? Like, how do you think agents will start to come into play? Because the other thing with agents as well is like they might infiltrate some of these crypto economic systems and start to extract value because they don't sleep, they work all the time, they're super
Yeah.
smart. It's like how would they potentially maybe cause issues with some of the like existing protocols or whatnot? I'm kind of curious a little bit on that, like pressure perspective of what's happening with some of that technology. And any thoughts overall on some of those
Yeah.
points?
Actually, that's a very good question, and thank you for bringing this up. Um, Actually, there is very, very like um, practical use case for that we have tried and we've used for testing our platform using AI. There's a very good tool. But like before I tell you more about that, I read like a tweet by CZ yesterday, uh, or like I think back before yesterday, saying that AI agents will make 1 million x more transactions than human. Okay, and then they will all use stablecoins because they actually cannot open bank accounts. I think it clearly makes sense, right?
Totally.
Because yeah, but like I think like I cannot verify this. I cannot tell if this is gonna be real or not. But we're gonna see. Um, but regarding Holobit, yeah. So regarding the platform that we use, so we worked with this amazing smart team from Hong Kong called Model Labs. Model
Hmm.
Labs, they worked like on simulating a stablecoin called Jeho from Aave. And then what they use is that they use a platform called Holobit. Okay, so Holobit is an AI tool for simulating systems on the blockchain. And the beautiful thing about it is that it can simulate up to like thousands of different scenarios, and where you can see like what would the system look like if you have Bitcoin going down, or there is X amount of people liquidating the token, or there is X amount of people doing like minting or redemption or any different action, right, in the protocol, because you do have many different players. And we did this maybe exactly the actual system of Black Quintes. We did it on this platform, Holobit. It's kind of mimicking the platform on chain. And we actually published that in our X account, and you can go to my X also and find it. We're gonna be putting this out for people to play with it. But for anyone who is interested, we actually start using that before it went live. It was like not available for public. It was only available for the developers who are using it, which is the one, like the team that worked with us. And the thing that we did and why we did this is for us to stress test the protocol before launch. Like, it's a way of auditing, and a lot of teams does like smart contracts auditing, but not a lot of them does cryptonomic like simulation and audits. And I think that's one of the most important things to make sure that your protocol is actually sound and secure before launching. So Holobit, so the name of the platform called Holobit, for any DeFi team founder who is interested to stress test their idea before actually taking it to the real world and make it public, you can go to Holobit on, I don't know, like edX, and just use it. I think this is one of the underestimated tools that is very solid and great, because you can add many different many different variables and like DeFi things to test your system and design things effectively. And I
That's
always
definitely
encourage people to be like mindful whenever they're designing things, and not launch things that are actually not sustainable, right? For example, like some stable coins have not good designs in the past, like uncollateralized stable coins or under collateralized stable coins. There are a couple of different token or cryptonomic systems that we've seen before that actually managed to attract a lot of liquidity for some time through like very large inflation rate and through a very large like yield promises, but the reality is that it's coming from unsustainable sources, or it's going for a stable coin that's actually under collateralized and with little to no risk mitigation measures. And this unfortunately creates harm. Okay, so again, anything that causes harm, economic harm for people, is not good. So those are bad ideas. To go back to your original answer, anything under collateralized, cancel. Anything built with very high inflation, cancel, right? You see how like countries that like struggle with having like a local currency that's almost worthless, this happened because inflation. A lot of tokens with very, very high inflation have the same thing. When you see like 50% inflation rate, it means that the token will be worthless soon. So avoid that. As founders, avoid this as investors.
totally. Maybe this is a really good segue too, because I am very curious around Quintes. When I saw, on looking doing some research, 33% APY, I think a lot of people are also a little bit like, they've been burned by like the higher APY things. And now as soon as you see like higher APY, often you're immediately thinking probably under collateralized, probably inflation, probably other things, like probably maybe not safe. Like it seems like too high a number, right? It's like that's kind of like a little bit maybe it's maybe like a limiting belief in a certain sense, but it comes from being in the space a while and being like, oh, that went to zero or that blew up to like an insane APY and then instantly crashed or whatever, right? Like, oh, there's 1,000% APY, it's like super unsustainable, but jump in when you can get a chance and then you get like rugged or whatever, right? So it's like, I'm curious to know more, like a little bit of an intro into Quintes and what you guys are doing. And then yeah, touch on like the 33% APY and what you guys are working towards there and how it's different. Because there's also the patent, I think, is very fascinating and very interesting as well. So if you want to touch on that, that'd be amazing.
Yeah, absolutely. And that's so much true. And we completely understand where people come from, like whenever they come with similar kind of concerns. And it's just like the beautiful thing about what we're doing is just like we A is very much transparent about how the system all works. B is that we're also very much mindful about it, and the reason for all of that work that we're doing is that we just want to be able to see a system that's much much better and actually ethical. And then C is that we spend a lot of time and a lot of effort and a lot of money on stress testing this and auditing this. And the best thing is that we didn't do it internally. We just like partnered with external research labs so for them to act like as a devil advocate, right? We didn't like have our own team. We told them, hey, like look into our system, test it yourself, do whatever you want to do with it, and then come to us, tell us if there is anything that we want to do before, because we hold like full responsibility of it. We care about building things that are actually solid and sustainable. Anyways, going back to what we're doing at Quintes. So we built Quintes to address the core failures in DeFi and traditional finance, which is volatility, inflation, and unsound incentives and yield sources. By building QNT, which is an over-collateralized yield-bearing asset that generates sustainable returns by leveraging novel cryptonomics, machine learning, high-frequency trading, and AI trading strategies, Quintes offer ethical, transparent, scalable yield both to institutional and retail crypto investors. And we unlock yield and competitive for like competitive yield for for currently there's about $350 billion worth of idle crypto sitting like earning 5 to 4% APY or less. And it operates within staking platforms. So simply how people can use it, they can come and deposit their assets, whether that's stable coins, and then borrow against our asset while paying no interest. At the same time, they'll earn passive income. We've been architecting Quintes and developing this for over 2 years right now. It's led by former researchers and developers who are ex Binance, Aave, Messari, and Synthetics. So that's briefly it. Happy to answer any specific questions you have about what we're building.
Yeah, I mean, like, so it sounds like the yield comes from not just one place, obviously. There's a component of the yield is kind of stacked through a couple different areas was where the yield comes back from. Is that right?
Mm-hmm. Yeah, sure.
Gotcha. Okay. And like and there's like a component of just like being able to, I'm sure, is there like different risk profiles? Like, are some people able to like, they want their yield coming from one way or the other way, or is like the token basically always has the yield coming in an ever changing way through different places and whatnot?
That's a good question. So let me maybe answer your question of how the yield is generated from. There are two ways to access this yield. Is one by minting QNT, and second is by just buying QNT from the market. And this allows people literally to access alpha yield with as little as $1 so allowing us to democratize access. While a lot of funds will ask for a like big amount of capital to subscribe to their fund, we allow people to access it with as little as $1 because they can buy Quinte.
Mm-hmm.
So how Quintes yield is generated? Um, it's not generated from unsustainable emissions, but from robust multi-layered system designed for scalability and capital efficiency and real revenue generation. The process has two major components. Is one Q&T engineered depreciation, because Q&T is a synthetic asset with a protocol governed target depreciation rate. The growth is driven by the patented cryptonomic engine that dynamically balances Q&T supply against its over-collateralized backing. The system integrity is enforced on chain through efficient liquidations, arbitrage opportunities created by the mint and redeem functions, and automated bet keepers, ensuring Q&T price tracks its target. The second is real yield from deployed collateral. To support the system and reward Q&T minters, a portion of the protocol collateral is deployed into a diversified portfolio of market neutral, Sharia compliant on chain strategies. And these strategies include proprietary, like high frequency trading, market making, arbitrage, and they're executed via institutional custodians and like off exchange settlement providers to minimize any centralized the exchange's risk at the same time getting exposure to the liquidity. And that this all flows back to the protocol minters and users, which bolster reserves and funding the ecosystem and providing significant rewards to Q&T minters and QTS stakers. So in essence, Q&T holders benefit from the engineered depreciation, while Q&T minters benefit from a share of the real yield generated by the protocol sophisticated trading infrastructure, while at the same time they can maintain directional exposure to whatever asset that they deposited. For example, if they deposited ETH, they can maintain directional exposure to it, while at the same time being able to borrow against the Q&T that they can use in liquidity and make like or like payment anyway, while also not being like charged any interest. So that's simply it.
Nice. Interesting. Very fascinating. There's a lot of, I'm sure there's a lot of layers. We could go very deep on it, but I would love to hop and shift gears a little bit into like just community, into the conversation around community strategy and what does community look like for you guys? What are some of your thoughts on it? But we always start this with like a similar question to all our guests. And I'm curious to hear your take, which is how would you even define the word community?
That's a beautiful question, and thank you for asking.
Hmm.
Community, um, like the community is people coming together for shared interest or shared goal or a mutual, um, you know, mutual thing that they connect to, and there's a sense of togetherness rather than like competitiveness, right? So I'm with you to support you to grow together to achieve that growth rather than like it's me versus you, right? Um, so community, I think that's what community is about. There is a lot of beautiful communities in blockchain that made this, let's say, industry as it is today, whether that's sharing knowledge, helping people, developing, um, teaching others, sharing experiences. So, and the thing is, community is never fixed, right? Like it's always changing, like the environment, the like atmosphere, the activity, the growth depends on like market conditions and how like the macro also like the micro condition. What's the project situation is? Where are we right now? Like what is happening internally and also externally? But I realize also every community is kind of having their own like vibes. So every community has their own vibe. Depends on really like who is there, like what how they think and what they're here for. Um, Designing all of that is very complex, and I like the fact that you called yourself a community scientist, because I believe that it really requires a lot of science and knowledge to just like enable that, like, or like, how can I say it, but like understanding what is the causes behind those um, effects, right? Everything is a cause and effect. And I think also building a community is not by coincidence. It's just like building muscles, right? When you go and lift weight, you just build muscles. Same thing, community, whether that's incentives, whether that's content, whether that's activities, whether that's acknowledgement, whatever the thing that you do creates certain kind of outcome. And I think it's never a coincidence, just like cause and effect. And you certainly need to be a scientist to understand what kind of causes lead to certain effects. I'm not a community scientist, but like maybe we can learn from you.
No, this is a great answer to the question with some really good flavor in it. And I appreciate the acknowledgement on the community scientist side of things. So ultimately, like even your first part of your answer, like our name, co-unity, it comes from when you break down the word community, you can think of it as like common unity. And as you said, like a group of shared people with a common unity, a common direction. And so that's a little bit of like kind of the thought process behind some of the name. And then there's this approach that we have. I did a talk last year at ETH Denver. It was called GTC strategy, which is go to community strategy. And so instead of your go to market, what's your go to community strategy? And the overall ethos and analogy to this approach has this element that you're so correct as well, that every community is very unique, has its own vibe, has its own flavor, and what something that might work really well in one community won't work in another community, you know. And so it's hard for us even sometimes. Like we work with lots of projects helping them build community. You would think, oh well, we like designed this bot and we did this gamification system with this client, we should be able to just copy paste it and it works in this one, right? And that's definitely not the case. And what you need to do basically, and what we lean into, is this scientific approach, this scientist approach, where you have to make some sort of hypothesis, right? When you look at a community, you make some sort of guess around, I wonder if this will land really well, if this will work. And then we have a really strong analytics element to how we work with projects. So we install all sorts of community analytics to understand all these different metrics. And then we can see if we did something in the community, we can see how the metrics changed and how well it worked. And then it becomes like okay, well, that experiment worked really well. Let's maybe just tweak a few things and maybe we can improve it. Or it's like, that was a big flop, we did baking soda and vinegar and there was no foam. It's like this didn't hit at all. We need to adjust this and like maybe try something different, right? And then as you do this loop more and more, you kind of build more trust, you build more reputation. You listen to the community, you take the feedback, you look at how well things kind of land within it. And so you can start to use a similar kind of a process, I guess you could say, like a guide, and how you can look at approaching it. But then again, it's not like cookie cutter for every project. So that's a little bit behind like the scientist side of things, is very heavily indexed around analytics and things like this. My background is actually mechanical engineering and I have a master's degree. And so I was also a very analytical mind, very deep into trying to understand and break things down first principles wise, and then try and put it together to see, what works, right? But maybe that's a little bit of a window into why we're kind of called that. I'm not sure if any of that jumps out at you, but curious to know more on your side too, around like what's community like at Quintes, and how are you guys thinking about community? Oh, you're on mute.
Yeah. So uh, I think community um
Oh, we're losing you a little bit, I think. Check,
is your
check.
team, right? Like your mentors, your advisors, the people who just like
By
um
the way, sorry to
work
interrupt, but we
behind the
did we did
yeah.
lose you for like maybe 10 seconds, 15 seconds. So I don't know if you want to just back up like
So
20
what
seconds.
here? Yeah. What
Pretty
was
much
the
as soon
first
as you
thing that
started
you heard?
answering, as soon as you started answering the question, it was like, oh, and then you disappeared. So
Okay, so you heard nothing out of that?
yeah, pretty much.
All right, no worries. I can say it again. So, yeah, what I'm saying is that um, a lot of people think community is just how many people you have on Telegram, how many people you have on like Discord, likes, comments, retweets, etc. The truth is that community is never like the numbers or metrics. It's first is who's part of the community, what kind of impact that they're creating, how much belief they have in what we're building. Community can be in the form of even like friends you have, the team, like support advisors and people who support you and support the vision and believe in it. It doesn't necessarily have to be real people like social media vanity metrics. And it's never been this way. Before social media existed, there's a lot of different communities. It's just people with mutual goals, right? For Quintes, how we do this is, or how we have been thinking of this, we've been thinking that, and I always say this, is that the best marketing team is never built internally. It's the community itself. And we do this through like building a system for that, like designing an incentive system to allow the community to feel that they are part of what we're building, and their actions actually create impact. Even the smallest words, even the smallest actions can create way more impact than anyone can imagine. And eventually they will see the result of that through the thing that they own in the protocol or the work that they've already done. But we always like to make the community themselves as our marketing team, because we love to know from the best and learn from the best, which is Bitcoin. Again, Bitcoin never, I think, had like their own marketing team. It's just like a community, the people who actually use it, who believe in it, that share the voice of it. So that's, I believe, the best way of creating system or like community that can have this kind of gigantic network effect. And
Nice. Yeah, like I think you actually had some experience also with like ambassador programs, right? And I think that's one thing for us as well when you look at taking like your 1% in your community, the people who are just the most interested and passionate and the advocates about you, right? And how do you structure that community energy and design the system, to your point, right? To have a great value exchange, you know? And I think this is where I'm curious to hear your take on, you know, this balance of extrinsic and intrinsic motivators, because you mentioned a lot of intrinsic things. You were speaking my lingo when it came to like when you create a structured program where you're giving them a lot of status, you're giving them role, you're giving them professional development, like you're really like helping them in a certain sense and connecting them with a more stronger sense of belonging and identity to what you're doing together, versus like there's a lot of programs out there that run ambassador programs and they're like, we pay you this much per month. And then the thing is like that just becomes more of a contractor than it does like an ambassador, right? If you're just going to pay them each month, they're just kind of like a contractor. But if you have a more of a scaffolding, more of a system, and more of a design, then it starts to just create much higher quality and just a better exchange, a better incentive exchange system, right? So I'm curious to hear your take on like ambassador programs and like intrinsic versus extrinsic. What are some of the things that bubble up into your mind around that?
Okay, that's a great question. And I think too much extrinsic value, like motivation, is not good, and too much intrinsic value, like motivation without extrinsic, like motivation, is not good. So I think a balance is good. But I also don't think that a system or like a community should be built on like just extrinsic motivations or elements like incentives, money, and like airdrop. Why? Because this is very short-lived and is not sustainable at all. This will bring you people for sure, will like increase the vanity metrics, likes, comments, and some numbers, like in your protocols and protocol, but those people will mostly not stay when this money just go. And the same thing, even in reality, like for yourself, like if you want to create a habit for your own, it's never like the real drive and motivation never happen by external factors. It happens by inside. Like, so if you want to have drive in your life, you need to fix the ideas, the thoughts you have, and like understanding like what drive you and why, the internal fuel. So what kind of internal or intrinsic motivations that projects can create? I think it's really unlimited. There are different things that can be done, but the truth is there's a lot of different very, very successful communities that have little to no extrinsic motivations, but they all work on intrinsic motivations. Things like belongingness, like acknowledgement, like valuing someone, or like um, some form of respect, or like support. It's just like, I don't know how to explain it, but this managed to have much higher ROI for the project in terms of the impact that people create and how long they stay. When they feel that they're valued, they're seen, they're actually um, acknowledged, and they are impactful. You always want to show people, like, or like, um, you want to prove for people the thing that they want to see in themselves, or like prove to themselves, right? And sometimes, specifically like with remote work, or like with a lot of different inputs in this world, and a lot of different communities and distraction, a lot of information, a lot of content everywhere, people need like a community that they can like resonate with, or connect with, or like show themselves, or be who they are in that community. And I think there is very big room for blockchain projects to create this through education, through um, consistent calls with the community, through creating some form of programs, or like community-led programs or activities, and empowering them, acknowledging them, um, maybe even in real life events, and yeah, just like allowing the community to literally fly as birds, because they can. I know that's a very funny analogy, but I think a lot of community members are very much motivated to contribute, and sometimes what really stops them is just structure, and knowing like why would I do this, like what's going to be the result. But when there is presence of the team, it can like, and when there is presence of actually community managers who are structuring everything to make the community contribute well, then those kind of energies will get out. Like community will be able to contribute, because I believe there's like everyone has more impact than they can than they actually know. And I like to amplify this. Like I like to
Cool.
allow people to see this.
I
I think
actually
community help each other to see their own potential.
totally. And I was just gonna say I really liked your, the birds thing. In my head, I'm just thinking of a lot of communities are kind of like chickens, like their wings are clipped or whatever. They just can't fly and they're just kind of running around the cage and going after the food and like pecking the food. But then it's like when you have these other communities where it's like they're not caged, they fly around, they're there because they want to be there, right? And because there's like a good system around it. They're not like in a cage and they just can't fly or whatever, right? I'm just, when you were mentioning that, I was just picturing these, like, this analogy of these two different kind of communities.
I don't know
It's a
where
good
that
one.
analogy came from. Yeah, I just like I just like really brought this from my head, but yeah, I'm glad that you resonate with it. At least like I don't feel like weird about it, but yeah.
Totally.
But like those birds also like want some food. I think they want some airdrop. Some of them.
Right. Yeah, they do want some
Yeah.
bird seeds for sure, but then they also
Yeah.
get this component of like, they get given, like birds, some birds are very colorful. They get given like some of this color in a certain sense, and they feel connected to the mission and all this. Anyways, I don't want to go too deep down this analogy, but
Yeah.
I think you'll really like this framework that I pulled together. So every episode I pulled up a framework. I'm going to put it on the screen,
Okay.
and this one has to do a lot with trust. And you've mentioned trust quite a few times. Trust is very important in communities. And when I go and
Yeah.
look for these different frameworks, I do a lot of like research. I use AI to help me with research, but I'd go back into different old books sometimes and pull different resources. And I always try and find something, usually that is like a bit older, but obviously like these principles are very strong and they always apply. And so what I'm about to share here is called the trust equation. Um, and this was written by David Meister in the year 2000 in The Trusted Advisor. And it's
Cool.
basically trying to boil down trust into a formula. And I kind of took this formula in a certain sense and adjusted a little bit to be more kind of Web3 and more kind of community related with what we discussed, right? So I'm just going to present it right now. I'm just going to go through it. And then I'd love to hear what jumps to mind for you and what that's like the biggest highlight for you. So when you look at an equation that you're trying to maximize trust, right? You're always trying to make the numbers on the top larger, the numerator larger, and the denominator smaller, right? Because then you get a bigger number. Simple maths. So the first one on the top is credibility. So credibility is things of, does the project, do they know like what they're doing? What's the team background? What are the results? Like, do they have technical documentation, partnerships, track record? Like, do they have some element of credibility to what they're saying, to what they're doing, to what's kind of coming out? That obviously makes sense. Then it's like reliability. Now, do they actually do what they say? I think we do a lot of work with the Eigenlayer team, and they've always mentioned in the past like their say-do ratio. They actually mentioned this is like our say-do ratio is very high. Like they do ship what they say. So there's a component of how high is that ratio with consistent communication, hitting the roadmap deadlines, transparent reporting, showing up every week, not just during like hype cycles. Are they like reliable? And then the third one, which you actually touched on recently as well, in a certain sense, is can members like feel safe? Can they? Is there vulnerability that's like allowed? Can they feel like the founders are accessible? And is there a component where it still has that human side, right? And connective tissue. I think you had a point on that. And then a big one, which you brought up a whole bunch. Then this is the denominator, the trust killer. Like this is what you want to remove more of. It's mentioned here in his equation as self-orientation. And so what does that mean? And we've mentioned this a whole bunch as well, is like, are they interested more in themselves, or are they interested more in like the mission, the brand, the collective, the community? Like where do their interests lie? And if they are interested more on their own self benefit, like if a team has an early unlock and they just want to dump, as you were saying, if there's insider heavy tokenomics, if the treasury is not transparent, it's more kind of opaque, because they don't want to share certain things. It's a team first roadmap. The more self-serving it is, then the closer that trust goes to zero, basically, right? Because if you see a project and you right away know it's like, oh, this is like just a straight up rug pull, obviously there's a component that they're straight just interested in themselves, and that brings the trust to kind of zero. So this is a little bit of a way to think about the trust equation with a project. I'm curious if you think something's missing, or what do you think really makes sense with this, and what are some of the first thoughts that bubble to the top of your mind when you hear this overview of the trust equation? I think you're on mute.
Yeah, certainly. I think the say to do ratio is real and is one of the most important things. It's like community love to see things happening and like things are being built. So appreciate you really developing this trust equation and sharing this with us. Um, this is, I can tell this is a work of a community scientist. I've never seen like a real equation for community, but yeah. So I believe that building things and constantly shipping is important. And yeah, um, what would you say like the thing that really kills trust the most?
That's a great question. As in, like, if you had to pick one of these factors, what do you think kills trust the most? I mean, I do think like the bottom one from a component of if you get a sniff or a whiff of like the project being more oriented around self-interest or self-profit, it's a really, really fast trust killer.
Mm-hmm.
Um, I think some of the more slower ones that maybe you don't notice as much take, they're more like slow killers, like the feeling of connection and belonging and intimacy. Those often take time to build, right? And so there's a component that doesn't feel like an instant kind of killer. Around reliability, depending on where your empathy levels are at as a person, you may be like, I'll give them a second chance or something. It's like they do have these other components going for them. And then I think even in credibility, there's a degree of depending who you are as a person. Like when someone's the first time founder, for example, with not a lot of experience being a founder before, there's still an aspect maybe of giving them a shot because maybe as a human being, they're very reliable and they're very good at creating a sense of like belonging, right? And they're not self-interested. Maybe they don't have as much of a C, right? So I think you could think through in a certain sense of almost scoring yourself, even in these individual ones, and seeing how high you kind of feel like you factor in. But I think the largest one probably is if there's like a whiff of a component that the project is maybe like straight up just like a rug pull in a certain sense, or a scam coin, or people call it scam chain or whatever. I think that's a very quick kind of community killer, I guess you could say. Yeah. How about you? What stands out to you?
You mean in terms of like community color?
Yeah, maybe in terms of community killer, and maybe in terms of like maybe which one's the strongest, you think? Which one do you think maybe you want to answer that one. Which one do you think is the most helpful? Like which one do you want to maximize the
Mm-hmm.
most out of the top three?
I think what we want to maximize in terms of a top three, considering what we're building, because I think every project has their own equation depending on what they're building and who they're targeting, right?
Sure.
For us, really, what we want to build is that um, reliability, um, absolutely, and like credibility as well as intimacy. So everything. But like, it's funny, right? Because I think they're all equally important, right? But
Mm-hmm.
for us, I think, and for every project, one of the most important thing is just reliability. Can I rely on these people? Can I put my money with them? Can I rely on this to actually like buy the token of them? Can I rely on them for if there is something down going, like they will fix it? Can I rely on them when I fix an issue, they will do it, right? This is one of the most important things because most of the protocols here are financial apps, right? And then we're building a community, and for sure, like that community will be using that platform. They will contribute to it, and reliability is one of the most important things, right, for us,
Mm-hmm.
and for many other projects, I think. Um, and I think the more that the project also continue, but like building and growing and scaling, the more important that that they need to show that they're actually reliable, like across different market conditions, right? Um, they need to show that, okay, we're reliable. Even when Bitcoin goes down, even when liquidations hit, we're reliable. We're reliable. Even when, for example, like JavaScript or whatever, like get hacked, like we're reliable. We're reliable. Everyone needs to always show that they're reliable, because that's how actually like real trust is built.
That
Um,
makes that makes a ton of
yeah.
sense. I mean, I think overall, it's like just the reason why I also picked this specific one is because I do feel very much so with DeFi products that trust and, as you're saying, also reliability is one of the highest determining factors on whether or not someone will even connect their wallet and then decide to deposit funds and then decide to, like, you know, engage with it and come back to it and, like, have an element that there's actually strong retention there too, because they trust it, they start to build up more trust with it. I think that's one of the biggest, I mean, that's what's collapsed so many DeFi protocols, has been a component of something has broken the trust. One of those things has broken the trust, and then the protocol cannot, like, recover. Like, I feel there's a lot of non-recoverable moments for some of these DeFi protocols because of how important really trust is, Curious to know, like, would you agree or have any thoughts on that?
Oh, absolutely. Yeah. When the team cannot be reliable enough, you mean? Um, yeah.
Yeah,
So
overall. Yeah.
yeah, yeah, absolutely. There are some instances when like trust is broken, because any like technical issues that the teams cannot recover, either because of like intentional or unintentional, and that's even like more heartbreaking, to be honest, when, for example, talented teams or very smart engineers try to build a good system and then this gets hacked.
Mm,
And then once it gets hacked, a lot of people feel disappointed, users and early believers. And then this kind of breach is not intentional, right? A lot of people kind of lose trust, even if that was unintentional. Some like if those engineers are not like actual founders, they might actually even get fired, right?
totally.
Because yeah, that was actually a problem. But even if they are founders, that reputation might fly. But the thing is, um, I believe that if that happened unintentionally, people can still get back up again, fix their mistakes, and continue proving that they're reliable and continue proving that they're actually right. Because yes, there are some bad players in the industry and there are some scammers, and I get a lot of scam attempts every week, every day.
Mm-hmm.
A lot of people reaching out to me like, hey, like, let's have a phone call. We're gonna be launching a company. We want to hire you. Oh, we're from this VC, or we want to, like, we have this Bitcoin buyer that wants to buy Bitcoin outside an exchange. A lot of different, like, literally scam of it, like, tens. And unfortunately, this is how the system works. So, like, the like industry works. Our role is to acknowledge this, share more about this kind of attempts for newbies not to get in them. At the same time, hire best auditing firms also to make sure systems are actually solid and secure and protocols are not risky. At the same time, um, making sure always to have very strong engineering team. So when everything happen, you'll have a backup. You'll fix it immediately. You'll try to resolve things, even like under bad situations. So
Mm-hmm.
this, even if something happened, you'll still be able to recover as fast as possible and like maintain that community trust.
Mm-hmm. Yeah,
Yeah.
it's always important, especially on the comms side, to have these, like, plan Bs and, like, just really being over prepared on, how these things could go, because it's really hard to predict things in this space, in this market, of course. I guess last kind of question. Any sort of, like, key kind of insights or last kind of advice you'd want to leave anyone when it comes to community building, when it comes to trust in DeFi? What kind of trumps the top of your mind that you would like to share with everyone before we wrap here?
That's a good question. Let me think. So maybe let me share one of the things that actually was like an aha moment, or something that I realized from analyzing the market for a long time. So trust in DeFi specifically, if you're a founder or if you're like builder and looking for trust. So trust is a word, or is like a feeling that people have, but it can be measured. And one of the ways to measure this is like how many users you have interacting with your system, how much TVL you have, how much people are actually like investing in your token or your company or platform, right? So it can be measured actually, right? But how to actually build that trust? So there, the trust, a lot of people think that liquidity, or let's say the trust indicator, which is the liquidity, follows yield, right? Which we've seen this a lot. Higher protocol, like protocols provide high yield, manage to have very high TBL. That's true somehow, like, a little bit true. But the reality is that liquidity and trust, like, like, doesn't follow high yield, but it follows trust. And trust is also built through transparency. Transparency. So again, going back to one of the most beautiful thing about the industry is that you can be transparent. Transparency about how the system works. Transparency when there is like a hack happen, exactly explaining what happened, how you're handling the situation. Transparency about, who audited this, like what happened, and making everything public. And while also making sure everything that you're doing is with you're doing it with integrity, making sure the system is actually economically and technically sound. You are also like ethical, like building things that align incentives between people and not, for example, benefiting one person, but at the same time harming another player to achieve that benefit. So yeah, trust is built through transparency, through building things that are actually solid. And this is how, like, liquidity, this is what actually make liquidity following, like, it's actually through trust. And for me as a cryptonomic architect, for a very long time I thought like liquidity is following yield. Yes, sometimes, but it's mostly following trust. And a lot of people are like have outdated system. They would say like, if you're like graduated from MIT, graduated from Harvard, we can trust you and give you our money. That's not how it works. It
Yeah.
really needs to be built on like real knowledge. And yes, some people have those kind of trust indicators as well, right? So you want to also play on those kind of things. This may call more of like credibility than reliability, right? Credibility of like having strong names, having credible auditing firms and like advisors and partners, which kind of build that trust, and the credible VCs on your cap table, credible team members, being doxed. Yes, those kind of things increase trust for sure. And a lot of teams need to take care of all the things literally, not just like one and two. Credibility is very important. Reliability is very important. Um, and make sure that you always like build for your community, not for yourself.
Nice. Love
Yeah.
it. That's a good one. I think that's a great way to wrap things up. So yeah, you guys can find, and also thank you so much for this conversation and jumping on here. This was really great. So thanks for making it happen. You can find Rand here at Kaleverse ETH, and then also what she's building, Quintes Org on X, and myself, your host. You can find me here. Yeah, fantastic. Thanks again so much for hopping on here. Rand, and yeah, we'll chat some more soon, and hope everyone else listening enjoyed this and has a great rest of their day.
Thank you, Dan. It's a really pleasure to speak with you here today, and thank you for having me. I enjoyed the conversation and I appreciate the insights.
Yeah, you bet. All right. Catch you
All
in the
right.
backstage.